Welcome to TradeTheMBI.com. This is John. This report is for the 13th of May, not Friday the 13th, but for some people it may seem that way. This is the Deocon Paint 2, and it recognized the DOC spread short signal from right here. And like we talked about, as soon as we dipped below that ABM yellow, which was at 41.62, it caught some interest every time we dipped below it. They wanted to buy that dip because that's been successful for, well, quite some time, as long as the Fed has been buying everything. We had a dip below the red line. That's where that little dotted line goes across, and we came back, filled that, and while that was interesting and all, we continue to see NBI readings that were continuing to fade. We had the crossover of magenta, we had the yellow below the orange line here, all negatives. And shakeout, like I pointed out, we had a higher peak here for the nice highs, and then we ended up with a lower histogram reading on the secondary one. Oftentimes that one will fail, but then we started to come back with this one even lower, and once it dipped, yeah, that cascade was ugly. It also corresponded when we had the pop right here, positive extreme, that little red dot right there, right at the very top of the market. We poked just a fraction above it, and then the cascade. Now, most of this action has been really related to the NASDAQ, but I also wanted to point out this one that we talked about, well, a week or two ago, the 4021. That's the last positive extreme where the algo began everything. And, whoa, we got really close to that at 4029 in the pre-market for a low already. So you can see that that was the draw that has been sitting there. And this was an interesting one too, because the NASDAQ, it had a much higher level for that positive extreme. It was right there. It filled a couple days ago. And within that, I talked about institutions love to buy those 50% retraces, and the money that had come in on, around the 5th or the 6th, they'd started some buying up higher. But once we hit that 50, you could see it happen. I mean, they bought it up strong the other day. And then when we started coming back down to retest here, we made 3 or 4 attempts on it, and I kept pointing out as soon as we hit that, and if they weren't able to keep it above it, we would see acceleration in selling, and that's exactly what happened towards the later half. Once it was below there, started cascading, and then it became 13K, psychological kind of thing, and we broke below that, and yeah, the handwriting was on the wall from that standpoint. From a gold standpoint, of course, this is always an interesting factor I'd point out. You would think that people would move into gold. A lot of times what they'll do is they have to move out of those commodities to cover margin positions in that, and so you get these commodities will trail off in market sell-off days. Likewise for the euro, the dollar started to come back a little bit because with that kind of weakness, it presents the perception that maybe interest rates would have to rise, and so there was a little bit of pullback within that. And I wanted to see if this would be a similar corollary, because I talked about this a few days ago, that those that had transferred into Bitcoin would have to do the same thing, sell those assets in order to cover margin conditions in their stock portfolios, and that's exactly what happened here with the futures. And we're back down to the lows that right around that 48,000 range that Tinker was before, and we could see that further cascade. So no shock with any of that. From a 50K standpoint, you know, this weakness started from the previous day, and we've just been in a straight cascade lower. We started to make an attempt at a pop-up back there, but you can see no steel reset, meaning we didn't get any dip back down to the one level, or for that matter, even I was watching it right here, seeing if we could get a cyan cross above, and that didn't happen. And so the expectation was any attempted pops were just going to fail. So from an intraday standpoint, looking at our 5K, started off pretty early. This is the 2A setup. And I keep pointing these out as they've been coming along. We started seeing them the last few days where our yellow line dips below the blue on the NBI, and that suggests that the pop that you're going to get from this run likely to fade unless you get this pivot up, and that just delays it. So it's a matter of when this magenta came in and started to pop, that was all pre-market stuff, but I began shorting those setups early on, and then we kept seeing lower and lower pivots of the blue, and as that happens, just created a decay. Right before market started, we started to see a build taking place, and it really just was flat and not able to move, maintaining our zero line. And when I saw the 100% decline, there was the potential that we might get a rise back up to that 100%, and literally was unable to make that move as we continued with these literal sub 25 pivots, and that's kind of the marker that I look for to see the blue break above them. And as that didn't happen, we really weren't able to catch any measurable growth. Every time we hit the 50% on these returns, I kept adding in right there at that white line that I had at 41.17, and then we started getting a series of these yellow dips, and I marked them all with these little ellipses so that you can see as they take place, because the expectation is any pop maybe is going to get up to the 50%, but then that just becomes another opportunity on a sell signal to fade them. And that just started happening throughout the day. I mean, there was a lot of volume, but every time they came in, the little pop came through, and literally I usually look for a return back to the first green. It's going to be a little harder to gauge that, because as soon as I have the language completed on this, we won't even see the green. It will just it's a tough debate on, still giving you the green signal, but flipping the to short signal when we start to see the pivot of the magenta and red up at the peaks. That usually is by and far the end of it. But some of them don't even really get much of a move at all before they start to cascade lower, like in this particular case, literally the bar up and then it flips. So I'm more reluctant to take long setups on that. When it happens further away on the initial decline, you can see it, but you get this long basing. I expect those to do a little better. In this case, this one got all the way up to the 61% before trailing off. And when it did, though, that broke down to new lows and created the same setup even at the bottom of the market. And again, still decent from a buy standpoint, because we're getting in at 59, you're getting peaks up to 68. It's still a pretty decent intraday run, so I don't object to some of those. You just want to make sure you're trying to catch them at bottoms, particularly when you have that red dip that goes sub-zero, and that's where we were looking at on a lot of these. Everything was sub-zero, even the blue indications. That's really a weak configuration. So here we are in the post market, and we already have as much volume as you would see through half of a regular day. So we're already getting quite a buildup, and this one started breaking down, and literally right here is the yellow dip below, orange in that, and we started to see the white spike up. That was this little pop right here, and then you get these big giant down bars, and that's where we're at this particular point. No change in that. I'm still looking for that 21, but getting down to the 29 range is pretty close to a 80% of fill on a daily basis for that giant move. All in all, though, the action's in line with our expectations of this increased volatility, as there's uncertainty about what those unemployment numbers mean as far as the Fed situation, and when we see the massive gap of unfilled jobs. And what the market's starting to recognize is that the stimulus and unemployment benefits are really promoting people staying home, and that's only going to cause an incentive for companies to have to offer more money to get labor in, and that's inflation. That's exactly the nightmare scenario that anyone who really understands economics knows really will create it. Throw in the gas shortage with the pipeline problem, and you've got the potential for just a spike inflation. So that could be temporary and ease off, but for now, we got to play what is, and weakness is built into this current setup as we look. So follow me on the Skype chat, and I'll put up charts as they're relevant. Trade well. We'll talk to you later.